Welcome back to another video, and in today's video I'll be teaching you guys how to mark the support and resistance in the 4-hour time frame correctly, and also I will teach you guys the relationship between the higher time frame and the lower time frame. While in this video I will also answer the question that you guys asked me in the comment section. And if you're wondering why the background change, I just came back from school. Like, this is the initial place I used to make my videos. If you scroll down to my previous video, like my very first video in this channel, this is the place I used to make the videos. So I came back from school. I'm in my brother's house. I'll be going back probably next month. Okay, so with that said, let's get into the analysis and let's get to the business of the day. So the first question you asked me was, how do you mark the support and resistance? Okay, now how to mark the support and resistance? You are going to mark the wick in the 4-hour time frame. You should mark the wick, not the candle body, because I've actually made a video that you should mark the candle body, but like, you get advanced with your strategy each and every time. Like me, I love to refine my strategy. So the more I refine it, the more I realize that it is actually better for you to mark it with the wick in the 4-hour time frame. Pay attention to the time frame, because if you go down to the 5 minutes time frame, you should mark your support or your resistance with the candle body, not the wick. But in the 4-hour time frame, mark it with the wick. One of the reasons is because the wick itself is actually a liquidity. So you should mark your support and resistance using the wick. Okay, so you can clearly see that each level that I'm marking has gotten multiple touch, either from it being a resistance or from it being a support. Okay, so we have different touches, we have different touch around the place, right? And I'm very sure that by answering that, before you were able to even answer that question, you must know what the support and resistance is. So the answer to your question is that you mark the wick of the support or resistance in the 4-hour time frame. Okay, so I'll move over to the next question. So the next question you ask me is, after we mark the 4-hour support and resistance, what do we really do with it in our trade? Okay, I think that the answer to that question is very obvious, because the word says support and resistance. So if it is support and resistance, and even if you go down to the 15 minutes time frame, the support and resistance is still going to be there. Okay, so what you do with it in your trade is that if you mark your 4-hour support and resistance, and then you go down to the lower time frame, like the 15 minutes or 5 minutes time frame, whichever time frame you choose to take your entry from. Okay, if the market has gotten to a, like for example, in this particular place now, this horizontal line is a resistance level from the 4-hour time frame, right? So since the market has gotten to this resistance line, you already have the idea that this is a resistance line from the 4-hour time frame. So plus your confirmation, like the structural liquidity or the engineer liquidity, of which I talked about, plus those confirmation is going to give you enough confidence to actually take the trade and to actually have confidence that the market is going to go in your direction. So you do with it in your 4-hour support and resistance, you do with it in all your trades. It gives you better confirmation. Okay, so I'll go over to the next question, which is the number 3 question. So the number 3 question you ask me is that is it that all we do in the 4-hour time frame is to analyze, to see if it is in uptrend or downtrend, and we go to lower time frame to look for the setup? Is that it? Because I'm trying to understand the relationship between the 4-hour and the lower time frame we use for analysis. Okay, the answer to that question is, after looking for the market direction in the 4-hour or in the 4-hour time frame, you still need to look for the candlestick patterns. Like, you still need to understand the candlestick patterns, and this is you can find the answer and the more understanding to this particular question on my other videos, where I talk about types of liquidity and how to take profit. The reason why you should look at the candlestick pattern is because you are checking in the 4-hour time frame
which means you are probably going to take the trade that day or the next day, right? So that is why after looking for the market direction, if it is going up or down, you still need to look at the candlestick patterns. Okay, for example, I said the market creates a long week. It means that the market is going to fill that long week in the types of liquidity and how to take profit. I made that video there. So this is a long week, right? So if you have seen this in the 4-hour time frame, and then you go down to the 15 minutes time frame or 5 minutes time frame, whichever you want to take your entry from, you already know that this is a long week in the 4-hour time frame, which means the market is more likely to come fill this long week, right? Plus the market is in a downtrend. Now you have two confluence that is actually going to give you confidence to take the trade, right? So after taking your trade, your take profit is going to be below this week. Why? Because you already have the idea that it is a long week liquidity from the 4-hour time frame. So it's like you are adding multiple things to actually give you a better confirmation and give you confidence to take each and every trade. Okay, so let me move over to the number 4 question. So the fourth question he asked is that, is it the case that even without knowing the 4-hour bias, we can still jump on our chart and find the setup, say in the 15, and take the trade? Well, the answer to that question is yes, because if you check the 4-hour direction if you check the 4-hour direction, you just need to check it once in a week. You can just check it once in a week. Okay? You don't need to check it every single day. You check it once in a week. You know where the market is going to, in regard to where it's coming from, and then you can start to go down to the 15 minutes time frame to start taking your trade. But the relationship between the 4-hour and the 15 or lower time frame, like the 5-minute time frame, is that you can be going back and forth between those two time frames. Okay, it's not really that difficult. Like this trade I took today on BTC, a student of mine actually take the same trade, the same setup, the same analysis, the same stop loss. I've just started to teach him like a week and a half. We have live session. He even commented in one of my videos. Okay, so like you just need to know what to look for in the chart. If you are able to know what to look for, which is the structural liquidity or a general liquidity, I already made a video on that. You can go and watch it. The structural liquidity, if you understand it, you just need to look for it every single time. Now if you observe closely, where I'm putting my stop loss is actually a week from the 4-hour time frame. That's where I'm putting my take profit, not stop loss. So you see, so I'm anticipating for the market to come out and take out this take profits, this week liquidity, and that is exact the same thing that the student of mine actually did. Exact the same to why? Because you already have the idea that this is a week from the 4-hour time frame. Now you can stay in the lower time frame and just be taking trades towards that particular direction. Okay, so if this does not answer the question correctly, you can watch the video on how to back test. Okay, you can watch it, you also understand it more. So it's very simple. You just need to know what to look for in the chart every single day, and you just look for it. You don't need to do anything else. And that is the how to trade with structural liquidity and how to trade with engineer liquidity. But I would prefer you watch how to trade with the structural liquidity, because that is my favorite entry model. Okay, that is my favorite entry model. So let me move to the last question you asked. Now the 5th question you asked me is that, please, can you make a dedicated video just about identifying the POI used for entry? I already made a lot of video on that. Okay, in every of my video I always tell you guys how to identify the POI, which is the order block. Okay, so you can go watch the structural liquidity, the types of liquidity, the engineer liquidity, how to backtest. I already did that in every single video I upload, but for the sake of this video, I'm also going to do it in this video. Now after knowing your inducement, which is this level here, now I said that an order block will be either before or after a change of character, or before or after a break of structure. So since you have your order block, which is this level here, let me go down to the 5 minutes time frame for you to actually understand it properly. Okay, now the market break The market broke structure at this level. Okay, we have our minor break of structure, right? Now this was the other block before the break of structure, so we'll mark that out first as our POI, and then to confirm that it is actually a structural liquidity, we will now have our inducement, which is the first pullback after the break of structure. So now we have our order block and we have our inducement. Now we need the market to actually break structure before coming to take out the inducement and then tap into our available order block before actually going in our take profit level. So this is exact same thing I taught on how to trade using structural liquidity. So if you watch that video, you will understand it well. So we have our break of structure here, right? So now this confirms a structural liquidity entry model because we have our break of structure, we have our inducements, and we have our on tap order block, which means the market has not mitigated that order block before. So our expectation is for the market to come, mitigate that order block, and go in our direction. Okay, but just for a quick recap, you should watch the video on backtest, how to backtest, you understand it. But let me give you a quick recap. An order block, which is your POI, because your POI now in this case is the order block. So your POI will be before or after a change of character, or before or after a break of structure. That is where you find your POI, that particular order block. And then let me give you another trick and another method, because in the beginning of this video I told you guys that I'm going to tell you why you should mark the 4-hour support and resistance with wick, and in the case of the lower time frame you should use it with the body. Now after having your order block, which is your POI, for in the 15 minutes or 5-minute time frame, so this has to be a lower time frame. If you are doing this, it has to be a lower time frame. Now switch over from candlestick chart to line chart. Now in line chart, you want to mark out the very tip of the line, the very tip, which means the very tip of the line at which the market breaks structure. Okay, after marking that, that is the exact place you put your entry. You see it? That is the exact place you put your entry. That is if you want to have a sniper entry and a very little stop loss. Okay, and by the end of this video I'm going to show you the before and after of this trade, so you will not say that. So it does not mean that I'm saying what I'm not doing. Okay, this is exactly what I'm doing, and this is exactly what the few people that have been able to teach, this is exactly what they're doing. So if you want to get a very sniper entry, you change from candlestick, you change it to line chart in the lower time frame, 15 or 5-minute time frame. Okay,
If you watch the video to this very end, I truly want to appreciate you. And just like I said in every video I make, is that if you are really determined and if you are really focused, you can learn everything from here in this channel, and you just need to practice it. Okay, practice makes perfect. Just watching one video or just doing it for a week or a month, that, and if it does not work for you, that does not mean that is not working. Okay, so you need to test it, you need to practice, and need to just keep showing up. If you are doing that alone and just having information from this channel, you'll definitely find your edge in the forex market. Because to be honest, it's not really everything that you need to be taught, especially when it comes to trading. Some things you just have to experience it yourself, and you just have to find your own edge. So if you find this video helpful, please do it to subscribe, and I will see you seeing you guys in my next video.